Praveen Agarwal now writes in and sends a question through email. He says that he is currently looking for a home loan from LIC Housing Finance, which he borrowed in October 2015. Now, the loan offered a fixed rate for the initial 2 years, followed by a floating interest rate. At the time of borrowing, he did not have a choice to opt for a floating rate loan. Now, due to demonetization, interest rates have fallen. Now, when he sought for a balance transfer, he was asked to pay a 2% penalty on the balance loan of 30 lakh rupees, approximating to 60,000 rupees. Apart from this, he says that he will have to pay file charges of 11,000 rupees. He asks us what he should do to reduce the excess outflow of interest. So another person looking to switch home loans there, and also somebody who's availed of the so-called teaser loans and is now stuck with a high rate.
This Kavita was not a teaser loan. This wasn't a teaser loan. And I really, Praveen, I want to tell you and other viewers who are watching this, that this 2 years fixed or 1 year fixed or 3 year fixed and then floating, in an environment where you are expecting interest rates to go down, and please remember, even if you go back to October of 2015, nobody really was talking about interest rates going up. There was absolutely no reason for you to look at a fixed rate interest at that time. If LIC Housing Finance was not offering it, every other lender in the market was offering it. To the best of my knowledge, even LIC Housing Finance was offering it. You should have opted for it. I think that was the advice we were continuously giving through this channel, through every other social media channel as well. Now that you are stuck, the two things that you should look at. First, if you wait till October 2017, that's 2 years from now, post that it turns into a floating rate. Moment it turns into a floating rate, there cannot be a prepayment charge. It's not allowed. So I think just wait. After October 2017, which is 9 months away, there won't be any prepayment charge. As far as the processing charge in the new bank is concerned, please, if you are able to, if you negotiate well and if you have a good credit history, you can definitely get in without payment of any processing charge, or maybe have to pay a token 5,000 rupee kind of a processing charge. So this is something that I think people should please look around in the market. You have choices. There are multiple choices. I think people just go with a brand that they feel comfortable with. There's nothing wrong with that, but please take a conscious decision when you are taking a loan product, and take a product that is right for you. Even now, almost every lender has a product where it is fixed for a couple of years. The only reason that product is being offered is to not allow the customer to quit the loan quickly and make him pay a prepayment charge. On a floating rate loan, a prepayment charge is not allowed as per the regulations.
Right. And here's my question to what you just advised. You told him wait for 9 months and then move on, and then try to move on, so you will not have to pay a prepayment charge. But how does the math really work over here? Because he is going to be paying a higher rate of interest for the next 9 months. That vis-a-vis the prepayment charge that he'll probably end up paying now if he moves. What is going to be more expensive for him?
So if he's taken the loan about 15 months ago, he's mentioned October 2015, I suspect the interest rate that he would have paid around that time would be around 10%. If he pays a 2% charge, to recover that, today if he shifts, he's likely to get around 8.5 to 8.75%. I mean, if he has a credit score which is high, he can look at the Bank of Baroda product that we spoke about. But I think a better benchmark is 8.75%. So effectively, if he is at 10, he will be getting a benefit of 1.25%. He's paying 2%, and it's not just 2%, it's actually 2.3%. 60,000 is the prepayment charge. On that, he will have to pay 9,000 service tax. So, I mean, it's very clearly 69,000. So, he might just be better off paying that 10% for another 9 months. Write that off to experience. Make sure that next time he doesn't get trapped into a product like this.
Right, and I like the way you put it, write that off to experience. And like Harsh says, the next time you go out, or whenever you go out looking for a loan, keep one thing in mind. All the banks and housing finance companies out there are fighting for your account, they are fighting for your custom, and they will go the extra mile to give you a good deal. So it's up to you to do the research, to look at all that is being offered to you, and then make an educated choice. And of course, if you do get stuck, you can always call in, and we will try and help you out. Harsh, I can see that you want to say something over here.
So I think there is a general preference, and probably correct, that people prefer public sector lenders, or what they perceive as public sector. There are private sector lenders who are who people perceive as public sector lenders. There is nothing wrong with that, but please case the entire market and then take a conscious decision to go with the product that you have. Talk to the private sector lenders. They will tell you the pitfalls. If you are convinced, then fine, you can go with the public sector lenders. Don't go blindly is the only thing that I can tell you.
Right. Research, 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 like we keep saying, is what helps in real estate.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.